One of the new features that's available in QuickBooks 2012, this is Enterprise Edition only, is the ability to change your inventory valuation method to FIFO, meaning first in, first out. Okay, so a couple different things that means. Check out our other video about how to turn it on, first of all, so we have another video there. But we want to show you in this video what exactly does that mean when it comes to inventory valuation. So I actually have two QuickBooks files open, because of course, in starting the 2011 version, we can have two QuickBooks files open. And in both files, I'm going to go ahead and create a new item, and it's going to be an inventory part, call it AA test. All right, I'm going to put a cost in here, cost of goods sold, and an income item, and say non-taxable for now, and sell it for $100 or $1,000. I guess it doesn't matter. Okay. Say OK. Now I'm going to hop on into my second file, and I'm going to do the same thing. Create a new item, an inventory part. Call it AA test. Okay. Cost of goods sold, put it into income, non-taxable. Cost is $10. Sales price is $100. Okay. Now this is my secondary file is my FIFO file. It's got FIFO already turned on. And my primary file is my non-FIFO file. It's my average cost file. So what's the difference between average cost and FIFO? When you value your inventory at average cost, when you purchase an item, let's say we're going to purchase an item we're going to purchase that item we just created for first $10. We're going to purchase one for $10 on December 1st. Okay, and then I'm going to purchase it from this vendor. All right. And then to make things easier, I'm just going to duplicate this check. And on the 15th, I'm going to purchase this item for $20. All right. So when I save this, my inventory goes up. If I look at my inventory valuation report, I have my test item here, my two purchases, and notice the average cost is $15. Okay. So where does that average cost fall into place? Or why does that matter? Because, I mean, obviously our asset values, the two added together, the 10 plus the 20. So we have an asset value of 30, but it doesn't come into place until we actually sell the item off, okay? So let's go in now and create an invoice. And we're going to do it to John Smith. And we'll date it the 26th. And we're going to sell him one test item. Okay, so I'm going to save this. Now, if I look at my journal here to see what's happening behind the scenes, notice that our sales happens, our accounts receivable goes up, and our income goes up. But at the same time, the effect on inventory, that's what we're looking at here. So inventory goes down by $15, and cost of goods sold goes up by $15. That's because it's taking the average cost. Okay, so it's taking the average of the two added together, and that was the 20 plus the $10 that we purchased it for, which equals 30 divided by 2, and we get the 15. Now let's hop into our secondary file, which is already set up for FIFO. All right, we're going to go ahead and write a check to same person and mark it the first, and we're going to buy a test item, quantity of 1 for $10. And we're going to go ahead and duplicate this check again. And we're going to buy a quantity of 1 for $20 on the 15th and save this. Okay, so again, if I go look at my inventory valuation detail report in here, I have my two items. It's still going to show me my average cost because we don't have reports in here yet that show the cost per lot. Okay, so still shows me my average cost of $15 per item. However, when I go create the invoice, this is where we see the change. going to create an invoice to John Smith again. I'm going to date it the 26th, and we are going to put on one test item, selling it for $100, and we're going to go ahead and say save. Now, when I go look at my journal, however, scroll on over here, notice that the inventory change is $10 because I purchased that $10 one first. So that's the first one that's going to leave my inventory. Also, when I go look at my inventory valuation detail report, take it to the end of the year here, notice that my average cost is $20 because it took out the $10 item there, and I'm only left with the $20 item left in inventory. So the cost or the asset value is $20. All right. So it's the first in that you purchased is the first one that's going to leave inventory. Right. So that is the difference between average cost and FIFO.